we begin, as always, with three things investors ought to be thinking about right now. Stocks posted big back-to-back gains over the past 2 months. Is this the Powell pivot? The housing market is a fixer-upper, but housing stocks have curb appeal. We'll tell you why. And tech titan relationship check. Musk and Cook are now best frenemies. Zuckerberg picks his own Apple fight. And who or what is fake Zuck? You got to be careful saying fake Zuck on television. On the Barron's Roundtable, my colleagues Ben Levison, Carlton English, and my twin brother Andrew Barry. We're fraternal twins. Ben, I want to start with you. Nothing lasts forever, even cold November rain. That's the economist Axl Rose. This past November, neither cold nor rainy. Pretty great time financially. What do you make of it?
It was a fantastic month. We got a 5.4% gain in November. But we have to remember that it came after a fantastic October, too. There was no Halloween scare. We got 8% in October for 14% over the past 2 months. That's the best since December of 2020. And it's driven by signs that inflation has peaked and that maybe, just maybe, the Fed is ready to pivot.
I like that. There's a little suspense in what he's saying. Let's talk about that pivot. Stocks soared on Wednesday, right, after Powell talked about moderating the pace of rate increases. And bond yields are coming down, right? So is this, but then they gave some back on Friday after the strong jobs. Well, is this a pivot or is it a double pivot? Because in basketball, you get called for traveling on a double pivot. Which is this?
I'm going to call this the ultimate game of chicken. All right. The Fed is looking at things and they're saying we need to keep raising rates. We need to keep rates longer to keep inflation, to get inflation to go down. The market's not buying it. The market is looking at this and saying, nah, the Fed is going to blink at the first sign of real economic weakness. And it's going to be a question of who is going to blink first. And the market, someone's going to be wrong. And if it's the market, it's going to be pretty scary.
What is the most important indicator I should be watching the weeks ahead?
Well, I'm going to skip over next week and look out to the week after that. That's when we're going to get CPI for November, and we're going to get the FOMC meeting for December. The CPI reading, if it's weaker than expected or even in line, we're probably going to get a nice rally to continue. And then it's up to Powell. Depending on what Powell says, the market's going to be trying to read him. They're going to be trying to see what is going to happen with things, and is he going to blink?
Andrew, you ready for this? Housing? You want to take a couple deep breaths? It's our cover story this week. Will U.S. house prices rise or fall in the year ahead? Will housing stocks rise or fall? And which one of those are you more confident in?
I'd say you may have a 5% decline in housing prices, but I think the home building stocks have bottomed. They've rallied in the last couple months. I think there's more to come. I'm more confident about the builders right now.
Tell me about some names that you like right now.
The number 2 home builder is Lennar, very well run. You can buy the trades for about 8 times earnings, close to book value. The A shares trade around 78 or so, and the Class B shares, which are super voting stock, are cheaper, and that's kind of, I think, the better way to play it right now.
The voting shares, so those voting rights are supposed to be valuable, but the voting shares are cheaper than the non-voting shares. I'm calling that one a Barry bargain. What else do you like right now?
I'd say Toll Brothers, the leading luxury home builder in the country. Their home sell for about $1 million versus under $500,000 for its rivals. They're more insulated from interest rate increases because of more affluent buyer base, and trade around book value, 8 times earnings. And I would say that any of the big home builders would be an acquisition candidate for Berkshire Hathaway if any of them wanted to sell.
Let me take a moment on commercial real estate. Blackstone says it's going to limit outflows to its non-traded REIT. There are risks there that you've been talking about for a while now. What do you see?
Well, basically, one of the biggest trends in the industry has been the selling of these so-called alternative funds to retail investors. The biggest player has been Blackstone. The biggest fund has been this fund called B-REIT. And basically, the problem with B-REIT, it provides limited liquidity to investors. Just last week, they moved to limit redemptions because too many people want out. I think it's bad news for Blackstone and bad news for this whole burgeoning industry, which has become very hot with a lot of brokers and investors.
Carlton, high drama with the tech titans. Yeah. Let's start with Elon Musk. Took a swipe at Apple on Twitter, and now I hear that Musk and Apple's Tim Cook are pals. What's going on?
Yeah, I mean, as if Elon Musk doesn't have enough going on, he decides why not just take on one of the biggest companies in the world. So the issue is a long-standing one, which is Apple charges a 30% commission to app developers to collect about $1 million or more in revenue on its app store. Not the first time someone's raised issues with it. Epic Games, the maker of Fortnite, did. Spotify has. Coinbase did this week. So Elon, who is hoping to start charging more on Twitter, for verification and things like that, he doesn't want to pay that 30%. So he says, I hear that Apple's looking to take Twitter off the platform. Tim Cook had a meeting with him, realized, it's just a misunderstanding. They went for a walk around Cupertino, where Apple is headquartered, and everything's fine now.
Must have been a nice walk. Facebook's Mark Zuckerberg weighed in. I want to read you a quote from him. He says about Apple, it's the only platform where one company can control what apps get on the device. I don't think it's sustainable or good. Is he going to get a sit down with Tim Cook?
In the case of Zuckerberg, it's one, Facebook is being hurt by Apple's privacy rules, too. So it's not just the commission. It's also the fact that ad tracking, how Facebook makes most of its money, or Meta, I guess I should say, they're not able to do that anymore. So it's just placating the top.
Okay, Facebook, of course, facing its own regulatory backlash. Let's look at a video from one advocacy group mocking what it calls too little regulation. And forget about the regulation points. Let's look at what happens with this guy's head in the video.
But if there's one thing you can always depend on Congress doing, it's nothing. Nothing at all. One moment. Mind if I make myself a little more comfortable?
That's better. Like I was saying, over the past 5 years, Congress has held over 30 hearings designed to hold big tech accountable.
Carlton, they're calling that fake Zuck. What did I just see, and how scared should I be?
So that's what's called a deep fake, where basically AI technology, the stuff that maybe you can't do but your kids can do online, is they create a video that impersonates someone's likeness. Huge risk. I mean, geopolitical ramifications if world leaders are copied, or, if there's a fake Jack Howell who is touting Bitcoin. Imagine.
Thank you all.